Assalamu alaikum, guys. Today we have a great interview here with Mike from Compaytence. So for every one of you who has right now issues with payment processing or wants to have more stable payment processing, who maybe has his funds on hold, or maybe just needs in general consultations and informations about the space, because sooner or earlier it will be important for you anyways, this is the perfect podcast for you. In our interview here is also Vincent, our client success manager, who usually brings better questions than me. So I think we will have a great interview today. And Michael, I'm happy to have you here in our interview.
Yeah, pleasure to be on, and thanks again for having me today.
Let's get started with my first question. And this is, how did you usually get started in this industry?
Yeah, it kind of cut my teeth. First thing out of college, went into financial services. So I started at Wells Fargo way back in the day. I won't age myself too much, but it was a long time ago, a couple decades here. So started at Wells Fargo Bank, worked at a big bank on the consumer finance side, working with loans, lines of credit, and then transitioned into the payments and treasury space. So that was back in 2009, 2010. So really have been in payments and really more so global payments since I left Wells Fargo in 2018, moved to a startup that was based in Europe. It was a global payments startup, and helped build that into $1 billion valuation company, and then worked for another international payments company in 2021 called Reach, which is a very popular provider for a lot of the online sellers today. And so now pivoted into a role where I'm really just a consultant to online brands. So I'm not a vendor. We are hooked into about 20 different, vendors globally for payment processing and support and compliance services. But I'm really representing the merchant and helping them scale strategically and really compliantly and getting them to hit the numbers that they want to hit. So it's been a great ride since.
And how did this journey develop then to becoming co-founder of Compaytence, and how did this vision of the company develop?
Yeah, I really came into really working specifically with online sellers, I would say about 4 to 5 years ago, and more global online sellers. And really just, I loved kind of just getting under the hood and really being a consultant with them at my prior role. And then I ran into this opportunity because the founder, who's based in Germany, was a partner of my prior company. So we were working together quite often. And ultimately, we just ended up forming a really great relationship. And then he needed assistance in the US, which, I'm based in the US, and have been helping him build that out ever since. So I've been around for, I've been in the business for about a year and a half. So it's been a really, really big shift in terms of the need, and a lot of the products now that we offer have really helped a lot of merchants scale. So I know we'll get into that shortly, but yeah, I kind of came into contact with the founder through my prior relationship at my employer. So it's been good.
Okay, that's great. So most of our clients usually have their e-commerce business. Some of them are new, but sometimes they scale really, really fast. So for them, all
Right.
this merchant accounts, payment processing, they see their money, but they don't really know what these terms even mean. Then we have other clients who do e-commerce for a long period of time, so they already know the struggle, basically. But let's maybe just cover the basics. What is payment processing? How does it work? And what can people understand under this term, payment processing and merchant accounts?
So again, as I mentioned, our niche is focusing on international online sellers. So payment processing, in a nutshell, is just the ability to accept payments, whether that's through a brick and mortar retail environment or online, person to person, whatever it may be, right? But again, our focus and our niche is really those global online sellers and those ones that are scaling fast, right? So I think our, who we work with and kind of our ideal client is really similar in nature. What we see, and really the reason that I joined the company is that, particularly in global payment processing, it's very hard to find a reliable, stable payment processor, right? And I think, that's where we can come in and look at this. And again, we're hooked into, I think I said 20 earlier, it's about 25 different global providers. So whether you're operating, let's say, from Dubai, which is a tax haven for a lot of these online sellers, or if you're operating in Europe, which typically has a lot more regulatory red tape and scrutiny, or if you're operating in Hong Kong, or if you're operating in the US or Australia, instead of you having to go out and kind of hack this on your own and like figure it out, we're able to kind of be that one-stop shop to really guide the merchant and get them to the right place for their business type. So I think the misconception of payment processing is that it's one size fits all when it's really not, especially in global payments, right? If you're working with a provider that doesn't have local payment methods or local currencies in certain regions, it can really impact your conversions, right? So when you're looking at a provider, it's again not one size fits all. And the other problem is that a lot of providers will say that they can do certain things, but me being in the industry so long, I can kind of call them out and really see if it's BS or not. And sometimes it can lack technical integrations if it's not a hosted or like a native integration and it pops out to a third-party payment page, right? So there's all these little nuances here that you got to be careful with as an online seller that's new. So we're really here to help guide these sellers to find the right provider, get the reliability so they don't have these funding holds, and really just be that person they can lean on for questions if they need answers to something.
When it comes to the people who use, for example, Stripe or Shopify Payments or Airwallex, they most of the time scale and then they experience, okay, now I have these problems. Now suddenly they hold back my money or they keep some kind of reserve, or sometimes they even hold back all the money until they refute my account further. Why these problems even occur? Why is it not that I just put into place this payment processing and then it works? I can scale to 5 million per month, for example. Why those problems even occur?
There's a little bit of history behind this here because the environment today is different than what it used to be. I remember Stripe when they were like a 10, 20 person company back in like 2009. I mean, that's how far along Stripe has gone. It was very easy to board. They're set up as what's called a PayFac or a payment facilitator. So you can instantly onboard, like we use Stripe. It's super simple and you can just board and you don't really have a lot of red tape, right? And we use other providers too. I'm not just saying we use Stripe, but what's changed though is that recently Wells Fargo was the sponsor bank behind the scenes, which gave them a lot of autonomy to make certain underwriting and credit decisions. And now the bank sponsorship has dissolved. So now there's a different bank behind the scenes that's working with Stripe. And they've changed some of the underwriting criteria, right? Making it tougher for some of these online sellers to sell, whether it's even in their domestic market or globally. The other thing, there's different risk triggers that a lot of clients are unaware of, because we get clients coming to us almost 2 to 3 times a day about a funding hold. When you're selling internationally, it's a higher risk trigger, right? So there's more fraud that happens cross-border than in domestic markets. When you're doing drop shipping, for example, that's a higher risk vertical. So if you don't have the supply in a warehouse and it's made to order, that's a higher risk, because if something happens with the manufacturer or something during the supply chain, it can cause issues, refunds, returns, or chargebacks even. It also depends on what you're selling, right? So if you're selling medical devices, if you're selling, things that have certain promises or guarantees, or if you have like high pressure upsells, right? You're trying to increase your average order value. All these things start to trigger a review or a hold, or even your online reviews can trigger a review for Stripe. So, the decks are already stacked against an online seller. The deck's more stacked against an international seller. The deck's stacked again even more against a drop shipper, right? So you're kind of adding these nuances to it because Stripe now is more regulated now more than ever. So that kind of gives you a little bit of history there in terms of like the why. And Shopify Payments, the back end is Stripe, right? They're in a strategic partnership. Shopify Payments ultimately has to adhere to Stripe's rules. There is flexibility to a degree, but ultimately Stripe is calling the shots, right? And the same goes for Airwallex to a degree. There's more flexibility with Airwallex. We work with them quite often, but they're still having a bank behind the scenes, which in the U.S. is JP Morgan. So there's someone behind the scenes is ultimately calling the shots they got to answer to.
And why is it that those problems not occur from the beginning? Because most of the time when I just start out, everything is working fine. I don't have any issues. But then suddenly, now as I'm scaling, as I'm making more money, then suddenly they hold back the money, they review my shop and so on. What's the reason behind that?
I would have to say one of the biggest things that an online seller can do is to communicate. Think of like your payment processor relationship, like your spouse in a way. If you're going to scale and you're going to do something different from the business that is out of the ordinary, you should communicate that business plan to them, right? What happens is that, let's say, again, in drop shipping, they find a winning ad or they find a winning product, and all of a sudden their sales go from 10,000 a month to 150,000 in a month, right? That is going to get flagged 99% of the time and get reviewed, right? And that's like, well, why is this happening? Everything's working fine. Well, it depends, right? A lot of times these junior operators, like it could be their first time hitting something good, and the percentages say that most of the time there's tremendous issues, whether it's chargebacks, whether it's refunds, customer service, right? So you have to put together like a scaling plan, right? And we do these a lot of times for merchants that are trying to forecast. You should communicate that. Hey, I'm testing this, I'm selling into this market, I'm anticipating the volume to increase. So once your volume goes up, you should communicate that. They're going to find out either way, right? I think people are like, well, what if it triggers a review? Well, probably going to review it anyway. So you should have everything ready to go. You should have good supplier agreements. So there are preventative ways to kind of ensure that you aren't going to get reviewed. But I think your expectation should be that if you're going to spike that high, you're going to get reviewed. I mean, just be prepared, I think, is the better answer to the question versus why am I getting reviewed? I shouldn't get reviewed. Well, I think you should just be prepared to get reviewed, to be honest.
So what you're saying is basically communication is the key. It's important to communicate. How do I do that? Do I just send an email to Stripe, tell them, hey, look, this is what I'm planning in the next month, or how in practice does something like this work?
Every business should have a plan, right? I think when you look at it, if you just have like some napkin math, document of like what the execution is, that's probably not the best thing. You can put this together on your own. We have I shouldn't say we have some, we have a accredited one that we put together specific for banks and payment processing. You should have your go-to-market strategy, right? Where your entity is based, where your target markets are. Your supplier agreement is ultra critical, right? You don't want to have just a phone number and some guy sending you product when you make an order. It should be a document, right? It's an agreement if you're doing drop shipping with your supplier. You should have, proof that fulfillment is X amount of days, right? There should be some testing involved. So you want to have something in the document that has teeth in it that shows that you're viable, right? That you're not a scam. Because also what happens with pattern recognition is that if you see a massive spike all of a sudden too, that emulates a fraudster, because if money laundering is happening, that's typically the behavior pattern, right? There's a big influx of cash. So the computer or the algorithm is not going to determine whether this is fraud or that's fraud. But if you have a business plan, that makes a whole heck of a lot of difference when a human being is looking at it, right? Versus one that doesn't have a business plan, right? Okay, this one has all the information that I need to say, okay, I'm comfortable removing the hold and letting them go forward. This other one, I'm going to need to go collect the information, right? So there's kind of a list of things that we recommend to provide in a business plan, which we have this all built out, that would really kind of eliminate some of these just bottlenecks and snags.
Makes sense. So what you're saying is when I scale, the algorithm of Stripes in the first moment thinks, okay, wait, what is happening here? Is this a potential fraud? What is going on here? And then they have no clarity. So that's why they need to review my account. But if I have the communication up front, have a business plan, communicate with them, they know what's going on. So I can decrease basically the risk that they review my account, or what would be like the effect I get from that.
So the business plan typically, like I have, several of my larger clients. I mean, we have like 3 to 4 processors, and I'll just give you kind of an example. anytime we have plans to go into certain markets, we typically will re-update our business plan that we've created and add additional information. If there's a new product launch, it's been tested. You got to think this is a human being that's looking at the account, by the way, right? The computer is going to stop you, but a human being is going to look at the information, right? Like you send in. So the goal is to make them comfortable. And in most cases, they say, thank you for letting us know, right? And you submit it through whether it's a support ticket or if you have a dedicated account manager, they'll log it. It just depends on the relationship that you have. In most cases, like with my processors that we work with, like we have a dedicated AM or partner manager. I flip it to them. They let their compliance team know, and we get back any issue. Do we see any issues here? If we do, 200,000 in volume before we were doing 50, like, hey, we're fine with that, but we want to, maybe we're going to do it with a 10% reserve, right? And so there's some negotiation there too. So yeah, that's really how we look at it.
So thinking about dedicated account manager. So this is, of course, what many clients ask us. So even the ones who make a lot of money, and this was also an issue that I had in the past, for example, with subscriptions, the business was doing fine, but I was thinking everything that I built over the last 2 years is the subscriptions. And what is if Stripe doesn't like me anymore tomorrow? And basically everything that I've built over the last 2 years feels at least under risk, because maybe there's a good online support, but I don't see any person that I can actually speak with. The same like when I use fintech bank accounts, I can use them a little bit, but I don't feel it's actually the same like using my priority or private banking. When does it actually make sense to shift from maybe Stripe, even if you do everything right, just because you feel not safe and you want to have something where you have a proper dedicated account manager? Because many times we have clients who ask for this maybe too early, they have no issues, and many times people do it too late, basically. And also what we see is that you need to prove also many things for proper payment processing. Many times you need good bank statements, you need history. It's issue many times with young e-commerce entrepreneurs who say next month I make 2 million, last month I made $50,000. So what's actually the right timing?
Yeah, and I think the question more is along like processor diversification, like when should I look at alternative options? Is that just to clarify? Yeah. You should always be looking, I would say. Stripe is very unpredictable in nature to a degree. Again, I have really good friends at Stripe that I talk to all the time and like account managers. So, I don't knock it. I think where Stripe is changing their models. So I think where people, want to look at is that Stripe is really moving into like a more of like a payments infrastructure system versus like a payment processor system. Like they used to just board a lot of online startups, and that's kind of their MO. And I think you're starting to see a move. They're slowly moving away from that, and they're really a financial infrastructure system. Like they have Stripe Connect, they have Stripe Tax, they have, you can use their dashboards now, and you can plug in third-party processors. So I think kind of recognize that, like it's good to have Stripe. It's easy, you can have it there. But if I'm doing like really big volume, I'm going to start diversifying, probably at that 100, 200,000 mark, right? You start with Shopify, Stripe, you look at like an Airwallex, you have Payoneer, but then you start to look at like, checkout.com or Adyen or PaySafe or Nuvei. There's kind of like this myriad of global processors that are out there. So yeah, I would say 100,000, 200,000 when you start, look at diversifying. Kind of what we offer, and not to kind of toot our own horn here, is that we've kind of done the labor to get account managers at all these processors. So like they know me, and like I already have a dedicated partner manager, and then we get AMs assigned to my clients. So if I look at like the entire portfolio of clients that I boarded for the last year and a half, I think I could probably put on one hand like the number of problems that we've had with hundreds of clients we boarded. And the reason that there were problems is because they were boarded, then they didn't communicate, or like blew up their account, which is like, it doesn't look good for me, right? So we try to reach out, and then they don't contact. So that's like that's bad on us. Most of the merchants, 99% of them cooperate, right? So there's no issues. So that's where, we're able to, get that alignment and that security for that merchant that they typically don't have when they just go one-to-one, right? You're kind of applying into this like black hole. You get some random account manager that may reach out to you. It's not really great service, but a lot of these big ones like Checkout, Adyen, like, sometimes they're just too big and it kind of gets mixed. So with us, we kind of give you that white glove through that big company.
When it comes to the company and also the banking setup, how important is it actually for the payment processing? Because many times we see it, we have a lot of clients from Europe, or as you said, people living in Dubai, but they have their US LLC, they sell in the US, but maybe also in other countries. And I feel like sometimes it's a little bit confusing. And you already mentioned that cross-border payments are also a risk factor. How different is it to make a setup for a US citizen who just sells in the US and a non-US citizen, non-US resident who sells everywhere around the world? And what is the minimum requirement for them and for you to even get them good payment processing?
Yeah, we see this all the time. There's a lot of clients that operate in Dubai, obviously for the tax reasons. But we see a lot of these what we call pass-through entities, particularly in the US, for example. You could set up an LLC in Wyoming or Delaware and you get a registered agent address, but there's two different legs of the pendulum here on payment processing or banking. And, obviously, Samuel, you're familiar with this, but you need to pass what's called a KYC check and a KYB check. So know your customer or know your business check. So these used to be kind of loose back in the day. Like to set up an entity, you can kind of use a pass-through entity and get processing locally. You really can't do that anymore. You need to have the KYC requirements, and I'll use the US as an example, is you need to have a personal residence address. You need to have, a government issued ID. You need to have like a social security number or ITIN in the US, and you got to have like a utility bill, right? Something that shows that you're living there. For the know your business, the biggest change is like, yes, you can register through Wyoming, you can have the registered agent address, is the physical address is like really a key. And you don't need to have this massive office. It could just be a co-working space. Like I'm in a co-working space and you just need to have an agreement with like a month-to-month lease is fine. It could be $300 a month. As long as you can receive mail there, you can Google verify it, like you're all good according to like they call it the schemes, Visa, MasterCard. It complies with the scheme rules to be classified as a local entity. If you're missing one of those, you're kind of like you're on a tightrope here, right? You could get shut down or you could not. It's like sometimes I see people that missing one thing and it works fine. Then I see some that are missing one thing and it trips it up. So like you're relying on a computer now to like basically hold your fate, right? So if you're doing hundreds of thousands of dollars a month, let's not rely on a computer here. Let's like guarantee that we're good to go. So that's why I kind of talk sense in a lot of these guys. It's like, do you want to try to take this risk or do you want to comply, right? And that kind of goes for every region. Like there are certain requirements in each region.
Okay, and you said that you are in the US and your company is also in Europe and the other founder in Germany. So where are you actually active? Are you only focused on the US, on US companies with US processing, or do you also work with other entities and do also processing around the world? Or do you think, for example, US processing is enough to sell all over the world? What's usually your recommendation and on which countries are you focused?
Really everywhere. Most of my customers are not in the US. I'd say 90% of my customers are out of the US trying to sell into the US. I think there's tremendous value because I'm kind of like that, the boots on the ground in the US and giving them the direct insights and intel. And then, if customers, they have time zone needs or something like that, we kind of share customers or mutually work with customers with my partners in Europe. So again, we kind of work everywhere. Most of the customers like across our portfolio, yeah, most of them are outside the US. I'm just kind of like that boots on the ground here and giving them those real life insights for US rules and regulations.
And do you see many clients who sell outside of the US? and the processing works still fine, or it's also for the payment processing part and the banks more important that the clients are selling in the US?
Oh, yeah, both ways. Like we vetted all of our providers. We've kind of pressure tested them, I would say. And I've seen these guys in action before. So like, I think the one thing is, just like the ecom network kind of you have these like high level ecom sellers that have their own academies, and you got these students, and it's kind of like everybody kind of knows everybody to a degree. This payments world seems like this big world, probably from the outside looking in. I kind of know everybody, which is great, right? Because I can go in and like, and if I don't know somebody there, I typically will know somebody that knows one of them, right? So it kind of all works together, right? So like I'm able to kind of be that direct connection without you having to go and form that relationship. So I've seen them like in action, processors. I've seen, the people that work for these companies, like they're very trustworthy. So like we only work with like, the best processors and ones that aren't scammy and have these random holds and stuff.
Okay, that's great. In e-commerce, are there particular industries or niches that you prefer to work with?
I mean, we really work with anything. I mean, if it's a physical good, that's kind of like our core. It could be any physical good. We don't work a lot with digital goods. We do work with a lot of creators. Digital meaning like, subscription, like SaaS, right? So like software. Um, most of our clients are not doing software, right? Or selling software or digital products. We work with a lot of creators and coaches though, tons. We have a really big relationship in the US with a creator community there. And so I work with like coaches and creators on really minimizing their exposure and chargeback risk and like their fulfillment processes, kind of front end management. There's more consulting. But we do work a lot. Anything physical goods globally, we can work with. Not really anything adult. I would say we kind of stay away from that reputationally. Yeah, anything high risk stuff like you mentioned, like you have a client that is more in the high risk space that we're working with, but we basically can whatever you're selling physical good, like we'll find a home for it.
One
Okay.
question that came up to mind here is because obviously you see what a lot of people are doing in the industry, what would you say are like the common or biggest mistakes e-commerce owners are making? Is it, for example, that they switch too late from a Stripe to a alternative payment processing option? Or what are like the main things where if you, for example, would have someone in front of you who is looking to make it as good as possible, what you would recommend them to not make this mistakes?
There's a lot of mistakes that are made. I think one of the common things that I see is, and again, this isn't like a knock on the community, right? Or anything like that. I'm an older guy. So, being in my 20s and stuff like that, my motivations were different. It's trying to get rich quick with your business. I think you have to take a step back, and going slow is sometimes the best thing that can happen to you so you can go fast. What I mean by that is that sometimes when you scale a lot, right, you get that adrenaline rush, you get the money, right? Things are happening very quickly, but then the problems start to happen very quickly, and then they bubble up and they compound, right? I can't tell you enough how valuable like having somebody like yourselves or a consultant working alongside you when these things happen, even if it's something proactive, right? Like we have very discounted like consulting services just to talk strategy. We even have a free academy to give you these insights for free, right? Like, we have 20, 30 modules. We can just send it to them and say, hey, listen to these 20, 30 modules. It's just trying to take a step back and ensuring that you have just the technical and operational chops to handle the scale that you're getting at, right? And I think it's you want to fail sometimes, but going so far ahead of yourself sometimes can be a bad thing. I don't know if that answers your question. I think it's just more not trying to get too over your skis here and just taking your time and just making sure, okay, I hit 50,000 this month. Let's do 70 instead of going from 50 to like 500. Like that's crazy. You're not going to be able to handle that.
Yeah, it makes sense to more like plan it correctly. At the same time, I also understand these people, because if you find a winning ad, you want to make the most out of it.
Right.
Maybe just a limited time where it's working in the market before the competitor is catching up. So
Correct.
let's say we have a e-commerce owner from Europe, let's say from a country like Belgium, for example, and he already has a US LLC set up, using Shopify Payments, let's say making some revenue in the US already. Um, how would you build like a game plan for him for scaling from his, let's say, 50, 100 K per month to over 1 million without any payment processing issues?
Yeah, so just from a consulting side, I'd really want to understand just, really what the personal and the professional goals of that client are, right? It's really trying to extract the information from them to really align to what I can do, and really are we compatible, right? Like, is this something that, I can provide value to? And again, we kind of like we pair our team up against certain entrepreneurs depending on what their specific needs are. If they want to go into Germany, for example, or certain like exotic markets within Europe, that could be better for my partner. Maybe it's a combination of us both, right? Um, I'd want to understand just kind of like their long-term objective with the business. Some people want to blow it out for 3, 4, 5 years, whatever, and that's kind of like our core. We don't really work with ones that, hey, 6 months and then I'm done, drop it, right? We'd also want to look at like their entity structure, right? So like from a tax perspective, we want to say, okay, you got an entity in Belgium. How is this structured? Is the US LLC kind of like the moneymaker for you? You're doing most of the revenue here. So just understanding just the operational mechanics and ensuring that the entity is built for the best tax purpose, right? So that way they're benefiting. Is it compliant? So I just want to kind of take a step back and really understand their goals, make sure that the entities are set up correctly, and like what their long-term objectives are. And then from there, we would really kind of go through product website audits. Like, is there ways that they can optimize conversions? Is there ways it could be more compliant? Is there ways to speed up shipping delivery? Can they have a local 3PL? So there's a lot to it than just the payment side of it. And I think that's where, people are impressed with what we do. We're not just looking at just get you a payment processor or get money out of Stripe or Shopify if my funds are stuck. We're pretty involved, right? We're kind of pulling these things out. And so I think this answer to this question depends on the entrepreneur, their goals, their products, where they want to expand to, and then we really just kind of build a plan around that to get them to hit their objectives.
My question is more like, and thanks for the answer here, more like when it comes to the payment processing, because obviously like taxes, this is a totally topic for itself. It depends on if they stay in Belgium, if they move to the UAE, for example, and a lot of things like that. But purely focused on the payment processing, is it like you say, okay, until 100, 200K, you make a better communication with Shopify Payments, with Stripe, whatever you're using there, and then from there we find you alternative payment processing options, or how would you create like this step-by-step plan for them when it comes to purely like the payment processing without taking these other points in consideration?
So yeah, we would look at, so this is where we kind of get into like more fee authorization or authorization rate analysis, sorry. So fee analysis and authorization rate analysis. So there's a couple things that we kind of do in this. So let's say everything's like fine, nothing's broke, but we want to optimize now. That's where we would look at it and say, okay, based on where you're selling, and there are providers that are going to provide better rates, right, than let's say a Stripe or Shopify Payments. We can then start to benchmark and say, okay, based on what we see with this provider, this is what your savings would be if we move over, and these are the other alternative payment methods that you may be able to access, right? We also want to look at it. It's like, hey, Stripe and Shopify, hey, they're notorious for their reserve. This one's going to give you more flexibility. And so that's where we would start to just have open conversations, like diversification. Like, I rarely get an argument to say, I don't want to open another payment processor to back me up, right? So that's where, we would talk about that. And then also, the one thing is authorization rates. So some processors perform better than others, meaning when a customer gets to checkout and they want to make a payment, Some processors will pass that transaction through, or some processors will decline that transaction, even if the customer has money in the account, right? There may be some false information that's being passed through, and the acquirer or the processor won't pass that information through, or sorry, the issuing bank. So there's kind of a few different nuances here. Like we have like direct processors in Europe that can offer lower rates than, let's say, Shopify or Stripe. It kind of just depends, right? We have to get under the hood and really look at this to see where we can add the value there.
Are those like the main two benefits you are seeing besides fixing the issues with payment processing, like the lower fees, and the other ones, obviously, that more payments just go through, or what do you see as the main benefits there besides avoiding money holds and stuff like that?
Yeah, I would say, I mean, obviously those are kind of like the main two. People want to pay less, but they want the merchant processor to perform better. Making sure that the currency selection is correct, right? So like if in Europe, for example, you have, various different currencies versus just euros. So that's where you want to look at the currency options. There's also like regions, like if you want to sell into a different region, for example, we call it local acquiring. So like you can use what's called like a merchant of record and get like local payment methods and access without having an entity there. And so that's where you can really start to look at this and say, okay, you can expand to this market. You're not just going to have Visa, MasterCard. You're going to have all the payment methods, and the performance is going to be really good. But those are kind of like the main core things that we focus on there. There's kind of three, performance, authorization rate, conversions there. The fees are in line. And then again, currency, payment methods. So those are kind of like all the things that we look at in totality.
I think that's a super interesting topic. What you just said is with this merchant of record, basically, because let's say I'm only selling to the US now, but I'm also having the plan of expanding to multiple countries, and I want to make it as easy as possible for the potential clients of those countries to become a client to buy my product. When should I look into this? When should I work with a merchant of record? What is a merchant of record for all the people out there who never heard of that terminology? Maybe you can go a little bit more into that as well.
Yeah, so think of a merchant of record. It's kind of gotten more popularity now more than ever, I would say. Stripe just acquired a merchant of record business. I think it was earlier last year, as part of their portfolio. Lemon Squeezy was the name of it. I work for a merchant of record, so that's helpful too, just because I know the landscape very well. But basically what it is that it allows you to unlock global markets and get those payment methods and get like local payment processing performance without having to go in and set up an entity, which, now there's tax implications. Sometimes you have to have, a person that works in that region to comply and be a full entity. It kind of takes all that burden away. Now, like, when do you want to access that and like kind of look at it? It is harder to obtain than just a traditional payment processor. Like, not everybody can sign up for one. In terms of when you want to look at it, is like when you have like product market fit. So let's say you're testing some markets here and you see like, hey, I got traction. I'm selling 50 grand here. People are, they don't have access to certain payment methods that I need. That's when you want to start to investigate to see if a merchant of record may be the option for you for that region. 50 to 100,000, I would say.
So the reason why people use it is basically to avoid all this hassle with, let's say I'm also selling to the UK, for example, setting up maybe an entity there, and dealing with the taxes there and so on. I can just use that merchant of record. He's like the merchant for me in this country, and I can sell my products over him. Is this how people can maybe understand it?
Yep. Yeah, I mean, I think you kind of hit it there. That's exactly what it would be. So they would be basically at the terms and conditions, like at checkout, you'll see like a badge for the merchant of record, whoever you're using, and the customer would click or they would see the terms and conditions or the badge, and it's like a reseller. It's almost like an instantaneous. The merchant of record is actually buying the product and reselling it back to the consumer. That's how it works in just like an example purpose, right? So merchant of record is there, you're using, they're purchasing the product and then reselling it right back to the consumer. This all happens at checkout. It's instantaneous. So yeah, I mean, you could use it there if you got, looking to really have local access in that market. And it really helps increase the conversion rates, because if you don't have an entity in certain markets, you can lose like 10 to 15% of customers due to false declines. You could just decline the card because you don't have an entity there. So you can lose a lot of conversions with not having the right payment processor. It could be a massive issue.
Interesting. Do you see any other benefits besides saving on the hustle of setting up everything myself, and besides not having this payment declines?
Yeah, I mean, you're not able to get certain payment methods if you don't have like an entity. So that's a major advantage, right? Like if you don't have, let's say in India, for example, if you don't have UPI in India, like that's going to be a major issue, right? And so the same goes for like, Ideal in the Netherlands or Bank Contact in Belgium, right? If you don't have those payment methods and you're trying to exert with Visa and MasterCard, you're going to miss out on an immense amount of opportunity there. I mean, it's like 50% of the market's going to pay with certain payment methods. So if you're just trying to go in and you don't have an entity there, you're going to lose those methods because you're required to have an entity in certain areas to access those payment methods. So you're going to lose on performance. You're going to lose on performance. You're going to pay more, right? And then you're going to lose on payment methods. So it's like you got 3 issues already going in without an entity. So if you can use that merchant record as the entity, that's going to have a tremendous uplift without you having to go in and do it on your own, which can take time, right? It takes months, years sometimes.
So basically what you're saying is, number 1, I don't have the hustle with it. Number 2, I don't have that many declines. And number 3, I can use local payment methods, whatever is common in this specific country where the clients are used to, which is increasing my conversion rate. And it makes sense as soon as I tested a country and I make, for example, 50 to 100K revenue there per month, then you say it makes sense to look into such a merchant of record.
Yep, exactly. 100%.
Okay, nice.
So a lot of our clients live, for example, in the UAE, have the US LLC, but they are still selling to Europe or want to sell in the European Union. Of course, there's a big differentiation. Some are selling digital goods. A lot of them are selling real goods. And they always ask us, do I still really need a Europe entity? Or can I somehow find a way to only use my US entity to sell to Europe without losing clients? Do you see this, that a lot of people are doing it successfully or not really?
Well, if you have a US entity and you're using that entity to sell to Europe only, most processors are going to shut you down, right? You should have a ratio, and the ratio should be like 70% domestic, 30% international. So if you're selling 100% outside of your domestic, or your entity, basically, wherever this transaction's routing, right? If it's going through the US for European, you're going to lose. I mean, you're going to lose across the board. You're going to have massive failed transactions. You're going to pay a boatload more. You're going to pay like 2% markup at least over the domestic rates. Currency conversion, some payment processors won't display certain currencies, so like that's going to limit you. And then your processor is probably going to shut you down. So I have not seen a situation where somebody is using a PSP 100% outside of their domestic footprint and it's stable. I've actually never seen that, I don't think. Unless they're using a merchant of record, that's different. But
yeah, I think this is a good point now when the payment processor is shutting you down, because this is the recovering part for today's video. And a lot of clients and a lot of people obviously suffer. They have either funds on hold or completely lose their payment processing. It also took me some time to differentiate, because sometimes there are people where it was basically logical that they lose everything. And sometimes other people just made some small mistakes. Like you said, cross-border payments, they didn't know to communicate, they scaled fast. Maybe the bank account didn't match with the website, some small things, and now all this money is on hold. What is the success rate to recover funds, and how does it usually work to recover funds?
Yeah, so that's kind of like the main reason a lot of people come to us is that funds are stuck somewhere, they got a massive hold, and we typically will want to understand why did they put you on hold, right? It can be kind of a combination of a few different things. And, violation of terms of service, excessive chargebacks, scaling too fast, right? There's some common themes here. And so with the reserve recovery program that we offer, it's really like a 90-day support program. And we do a lot of coaching and insights on this. So, a lot of times they scale and then they won't be able to manage their service aspect of it or keep up with questions or refunds or returns or whatever it may be, which then leads to chargebacks, right? So a lot of this, is we go audit the website, we'll look at things and just understand where customers are perceiving one thing, but then getting another, right? And so, it's pretty involved. So we want to understand the reasons of why the shutdown occurred. There's typically going to be some reason that the provider provides to a degree. Now, we'll usually flat out ask what's your chargeback rate in the last 30 days, and they're like 8%. I go, well, there's your problem, right? So we gotta wrap a plan around this here. And there's no like silver bullet answer to any problem that we come across, but there's common themes, right? And so, what we do is we really put together, like, it's like a 2 to 3 person team. Typically it's gonna be me or my co-founder, then 2 of the data team members, and we will de-risk the business. Basically, we'll go through the website, we'll update policies, we'll go through chargeback prevention measures, we'll go through refund policies, we'll go through shipping policies, we'll go through the supplier agreement, we'll go through go-to-market strategy, we'll go through who's their ideal customer profile, we'll go through their funnels, we'll go through their upsell strategy, like everything. It's a laundry list of auditing that we do. And we get them to bring the level down in terms of risk down to a tolerable level. Then we present a packet to these providers and we really say, hey, based on now the new measures that they've installed with us, we believe the reserve should be X. And this document's very involved. It's like a 25-page document we put together. We send it in and then we get the provider to really play ball with us. So a lot of times they'll say, okay, we'll release out of the 100 grand, we'll release 50 grand now, and then we'll give you 50 grand in 30 days versus just they're stuck, right? So, that's where we can kind of, it's more art than science. There's not this quick answer. We say, we're going to get you your money out and, send like a legal notice to them. And we work with attorneys, but there's a lot of art in this. Our goal is to really equip the merchant with the tools to not only get the funds out, but to like successfully scale their business like beyond us. Like take everything we're teaching you and like blow it up after that, right? Like not in a good way, like grow. So that's really like what our reserve recovery program is. It's the goal is to get the money out, but the goal is like we're going to coach the heck out of you. We're like going to tell you how the banks work and what they look at. We're going to tell you all these little tripwires that are causing issues with your business. We're going to optimize customer experience. So it's like these multiple things that we're really trying to help out with versus just getting the funds out.
And how long does it take to release funds on average?
It depends on the provider. Some providers, I mean, we work with really any provider, but the main ones, obviously, Stripe, Shopify Payments, and PayPal. We have, I think everyone calls them insiders. They're just like contacts. I mean, I think there's like these cheat insiders. I call them just, they're our contacts, but like there's bureaucracy, but we do it the right way. So we're not like having somebody click a button because we're paying them this exorbitant fee. It's all legit, right? I'm sending the business case in, they're escalating, and they know us, so they're very comfortable with being more aggressive with us. So it could be as fast, like our fastest one was released. I think we got 50 grand released in 10 hours after submission. Sometimes it could take longer. It just depends, but as quick as 10 hours on average, 3 to 4 business days after we submit, we'll get an answer.
Yeah, aggression is a good point. We see many people, once they get this message that funds are on hold, they try to contact the support. Then many times you can't even contact the online chat anymore because this function
They'll
is not
cut you off.
And then
Yeah.
they go completely crazy and text 50 emails and saying, "You're scamming me, release my funds as soon as possible. I will make a lawsuit." And then that's basically the story ends there after they send
Yeah.
out these emails and they calm down, then they don't know what to actually do. Is it the right way, or what should these people do
Oh,
instead?
yeah. Don't do that. It's in the terms and conditions, right? There is language, and this is with every provider, that they have the right to hold funds, right? So like you got to read between the lines, but no one's a legal expert. Like when you sign up for something on your iPhone, like you sign up for an app, there's this terms and conditions that no one reads, and you hit agree and you move on, right? Kind of the same with Stripe. The one thing is you got to be patient, right? And you need to take a step back and not be a keyboard warrior and just start going off, right? You need to like really put together a business case around this. And if you want to try to do it on your own, at least try, right? And just send the business case, get something back. And a lot of times they're not going to budge much, right? Just to be honest. If you have a chargeback rate that's excessive over 2%, or you scale just an enormous amount, there's just going to be a review. I mean, that's just what it is. They're not stealing your money. They're doing the review. And now I've seen some weird situations, don't get me wrong, where I'm like, this is odd. Why are they even holding funds? So there have been some merchants where I agree, and I've been seeing a lot more lately. But don't just go crazy though, because they'll just cut you off, ignore you, and then you're cooked, right? And then they don't want to play ball anymore.
And do you see that it's possible to actually recover this account, make it work again? Or do you think as soon as you lost an account, when you lost this relationship, it's forever gone?
Well, they have the KYC stuff, right? So they know who you are. So like they can trigger and say, this merchant is fraudulent, or this is that, just they'll put notes in the account. I mean, they can even put you on the match list for, not legitimate reasons in some cases. Like if you go really crazy on them, they can just say, they can think it's fraud or money laundering and just label it as that. And then you're really screwed. So I mean, you can't just kind of work around it. Like I've seen people, it's like, I'm just going to set up a new entity here. It's like, well, they're still going to see your KYC information. You'd have to completely dissolve yourself from the business. You just have to do it the right way. I mean, if you really want to use that provider, you just have to be patient, calm, submit the package. And our success rates are pretty high. I mean, we're like around high 80s is what we see. The only time we don't see success is if something kind of comes out of the woodwork and then we don't know and we're not told, like, oh, I blew up this account 5 years ago. It's like, well, now you tell us, we didn't know. So there's a high degree of success in getting the account restored. Sometimes it takes longer, but it could be as quick as 10 hours.
Makes sense. So for example, if someone is working with you guys, what do you do for them? How is the process working? Can you maybe also share a little bit about that?
Yeah, on this reserve recovery program?
Yeah, exactly. When someone is coming to you guys and this person is having like 50K, 100K, 200K on Stripe, for example, blocked, how do you actually like help them to get it back? I mean, you already told a little bit about like going over the website and so on, but maybe you can go a little bit more into detail there.
Yeah, so kind of like the real step-by-step process here is we want to have a call first, right? There's some cases that we can't take, just to be transparent here. We can take most cases, but if there's fraud or something involved, it's hard for us to really justify taking those cases. So we'll do a case evaluation, and then from there they'll submit like kind of like an intake form, which will at least give us a better analysis in terms of like what our win percentage would be, and what we feel in the case. It just gives us some more confidence there, and then we'll provide a proposal based on that. It's going to be a fair proposal based on the work, and then just give you like a success kind of gauge in terms of like what we feel based on the data that we have. Sometimes the data changes as we're working with these people, and I'm like, well, we didn't know that, so now it's kind of changed our success gauge here. And then from the proposal, once that's signed, usually our goal is to like get things done within a couple weeks. Now, once you sign, there's a little bit of a homework assignment for the merchant. There's a type form that they'll need to fill out. It takes about an hour and a half. It's really detailed business information that we're asking. Talks about go-to-market, entity setup, forecasting, reason for chargebacks, customer service teams, employee count, operational kind of like steps, like once a refund happens. So we're like really digging into the business here, like we're going. And a lot of times we see they don't have these. So like we're kind of helping them, like saying, okay, here's what you need to do in this scenario. Here's what you need to do here. So we're actually helping their business just be better operationally, right? And then we build out this assessment in a very clear format, because you got to think, when funds are held, a human being is going to make the decision here and whether to release the funds. So the packet is very organized in a way that is really underwriter first focused, because I know these guys. So like we've kind of built one for every provider. So it'll go over all the order details, entity details, their supplier agreement, and then the supplier agreement should have certain language in there. So we'll like update the language, like we'll go through all of this, and then we'll appraise it and say, okay, based on our review, you have 100 grand stuck. We believe 75 should be back to the merchant, but we'll tell the merchant and say, hey, 25,000 should be held. And here's why, because the chargeback exposure window is 6 months. So like, we're very logical here. We're not saying we're getting all your money out. And typically we don't get all of the money out unless it's like, Stripe's held it for 6 months and then they just ignored everything, right? That's different, right? But like a lot of cases, we get a good percentage out, but there needs to be funds held. It's just part of the game. Like there needs to be risk that's hedged on the payment processor side. So we explain it, and most merchants are like, yeah, absolutely, that makes sense, right? So a couple of weeks after we get that doc back, and then we submit. So we try to get it all done within 30 days, submit it, and we're good to go.
One more question of the podcast is, with this fund release, do you focus there on the US? So if I use US Stripe, US Shopify Payments, and so on, US PayPal, or also if I use something in Europe?
Oh, it's everywhere.
Everywhere. Okay.
Yeah, Airwallex too. We've been getting a lot more clients that they weren't boarded with us. Like we have direct boarding at Airwallex, so they're pretty friendly with us and favorable. Like we have compliance teams over there too. We've been seeing a lot of Airwallex ones lately, but we can help out with those too.
Do you see that Airwallex is in general like blocking less times the accounts of people and is more easygoing in comparison to Stripe and Shopify Payments, or from your like experience, is it same? How would you rate that?
Airwallex is, in my opinion, significantly better. But what you see though, you kind of follow the money, I would say, with these guys. So now everyone's going to Airwallex, but you got to think, I've seen accounts that were boarded at not my accounts. I've seen ones that I'm like, how did they board this customer? It's weird. And you're going to see that risk tolerance is going to go down soon. I think they're being a little too risk heavy right now. I've talked to a couple of my partners over there. I'm like, you guys are boarding some really not good accounts, in my opinion. You're going to see this thing, it's going to collapse. This goes with any provider. Like with Reach, it happened with Reach. We did a lot of drop shipping when I was over on this side, sending a lot of deals to Reach, and now they've like shut it down. So, you can't just open the floodgates. You got, that's where we kind of vet these guys out too. And like, it's like, if they're a good business, like we want them in our portfolio, and we kind of keep out the bad actors to a degree. Or we help them out. I shouldn't say they're bad actors. They're just green. They're immature. They need a lot of coaching, a lot of guidance, and we're fine with that. As long as they're taking that coaching, right? So, but I see the pendulum's probably going to move around here a little bit with some of these. It's going to get harder for payment processing, in my opinion, in general.
Yeah, I mean, I think it's not just in payment processing like that. It's in every scenario. Even if you compare it to Dubai, first they open the
Mhm.
borders for everyone, and then they introduce taxes and more bureaucracy and so on. So I
Yep.
think it's always like the beginning phase to attract most people, and then they become more and more strict, basically.
Yep. Yep.
And
100%.
also Stripe, for example, as far as I understand, is becoming more and more strict.
Oh yeah.
So it's getting more and more hard to have not any issues there.
Oh yeah. Yep. Yeah. They're going for IPO as well. So that's a big, and they've been really de-risking their portfolio to really clean that out, because they don't want to have all this like high risk, and it's not just drop shipping, it's just high risk in general. They were doing like prop trading. Like I came across a guy, this maybe like a year ago, but I mean, he was doing prop trading. He was in Dubai, like selling internationally, just using Stripe. I was like, how long you been doing this for? Because I'm like, if you're just, I was like, you're doing like a $2 million a month business on just Stripe doing prop trading, which is like, I was like, I'm surprised you weren't shut down a long time ago. But
Mm.
yeah, they're kind of just purging all that stuff out now.
Yeah, so I will add all informations in the subscription box, the contact details, the website, the different programs, and also for all of our clients who are watching this interview right now. We are using the services of Michael and Compaytence. We have clients who use it, so the service is great. And I think just this long experience, many years of experience, and having this different payment processors, and especially also fund release, I think that's really, really useful. So yeah, thank you very much, Michael, for this interview. It was great, and we are looking forward to working with you in the future. And thank you very much for your time.
Absolutely, yeah. Thanks for the time, guys, and again, look forward to the post once it's up. Appreciate it.